Famous Brands has today announced some what we think really strong results, driven by the fact that our revenue is up 12%, profit before tax is up 23%, dividend up 20% to 300 cents per share, our headline earnings per share up 20% to 406 cents. And I think that performance has really been masked by the fact that we've driven our turnover up 12%. There's been a nice 17% growth in gross profit. And I think in these really tough times, we've done a phenomenal job of containing costs, particularly in an inflationary environment. So overall, a great set of results. In terms of margin, we achieved an operating margin of 20% versus last year's 18.5%. It's been a long time coming. The market have often asked me in terms of our ability to generate a 20% operating margin. In the past years, we've turned in of the order of 18s and 19s. We set ourselves the goal of getting operating margin by 20 by next year, so we're 1 year ahead of time. So we're very proud about the operating margin number. And I think Famous Brands is a business that really has been on almost a 20-year trajectory in terms of growth. This time round, it's our 13th year of record turnovers and profits. And what we do this year is in November this year, we actually celebrate 20 years since the business first listed in 1994. And I think if I can just talk about a little bit of some of the milestones along the 20 years. In the last 20 years, from a revenue perspective, this business has shown a 22.4% compound growth in revenue, a 25% growth, compound growth in operating profit. The share price has been phenomenal. It's a 23.4% growth in share price. It listed at 145, and this morning we're trading at 109, and that's translated into a market capitalization of in excess of 10 billion. And when the business first listed, it was a mere 36 million rand. So it's been a wonderful journey, and I think these results speak to the fact that this business has delivered in terms of the type of things we've spoken about for the last 2 to 3 years. What we've spoken about in the past is the fact that Famous Brands is a business that's all about building capability. And we speak about building capability across our business with regard to building capability in leadership, building capability in franchising, building capability in manufacturing, and doing the same thing in logistics. And I think what we've also seen again is the highly cash generative nature of this business. I mean, we sit in a business today where we have a balance sheet which actually has no debt on it whatsoever. In fact, we're cash positive at the moment. And as a result of that, what we've done, as you'll see in the SENS announcement earlier made today, is we talk about a step change which Famous Brands is about to embark upon. And I just want to elaborate a little bit in terms of what that step change means. Is that for as long as we've been around, we've been really trading in this food services space. And last year what we did was we did a very deep evaluation of the Famous Brands business. And coming out of that, we identified the fact that what Famous Brands is pretty good at, we think we're really good at being involved in the retail industry. We understand logistics, we understand manufacturing, we know how to build brands, and we've got some fantastic people in our business. But underpinning that theme is really the strong balance sheet issue where I have the ability to pay down debt and to pay off debt quite quickly, and that's in relation to the highly cash generative nature of the business. So what we're suggesting right now is to say is there an opportunity for Famous Brands to, notwithstanding its presence in the food service category, is to cautiously embark on expanding the competitive landscape. And to that extent, we've identified the new landscape as being leisure. So Famous Brands is about to look at its ability to trade outside of its comfort zone in terms of food services. And the way that we describe leisure is probably a combination of hospitality, beverages, FMCG or fast-moving consumer goods, and if we get really brave, even to get into the retail space. So that's where we want to be taking the business long term. But however, not for one moment abandoning our food service business, where we still think there's strong runway for growth in terms of acquisitive growth by continuing to acquire what we think are best-in-class franchise brands, by making sure that we continue to deliver what we call organic growth or like-on-like growth for our existing franchise partners. Numeric growth, the target this year is to open 300 new restaurants across the South African and African landscape. And then to continue to look at what we call low-hanging fruit in terms of our manufacturing business. We're embarking upon possibly later this year manufacturing our own serviettes, which is currently being outsourced to a third-party vendor. We go through 300 million serviettes a year in this group, so it's a part of the business that we think we should be doing ourselves. And then on the logistics part of our business is that there's some opportunities for us to take back what we call some outsourced third-party distribution. We've outsourced a part of our Gauteng frozen business for the past probably 7-8 years. It's a business that's worth about 400 million rand in terms of revenue, currently being done by another vendor called Vector. The problem is at Midrand right now is that we've got a capacity problem, so we're looking at the capacity for Midrand. And one of the opportunities is to open up another depot, or satellite depot as we call it, out in Polokwane, so we can move some of the volume out of Midrand and take the heat off Midrand and take some of that business back. So overall, we're in a great space. I think the business is rock solid in terms of its core business, and then of course there's this exciting opportunity to want to tiptoe out of food service into the leisure space. And in that respect, what we've done too from a structural perspective is that earlier this year, my title was changed to Group Chief Executive, and we installed another colleague of mine, Darren Heel, as the CEO of Food Services. So Darren will now be responsible for the day-to-day operational part of the business, and my role will change in terms of being much more strategic and looking at the business long-term in terms of acquisitive growth, strategic growth, and how we can set Famous Brands up on a path where it can continue to grow for the next 5 and 10 years. So overall, I think these set of results, great set of results, but I'd like to say with still a lot more still to come.